Okay, hey everyone, Mark here, MarkP Markets. Thanks for joining me for another Bitcoin video analysis. Here I am simulcasting on TradingView and on YouTube. All right, so again, thank you all for being here. Now, here, let me hold on a second here. Let me just move something over so I can see the people on that chat. Cool. So I want to welcome you all. If you're new to the stream, here's how it works. So first thing I'm going to do is I'm going to run through the economic calendar very quickly, and then I'm going to go through my Bitcoin analysis, and then I'm going to answer your questions. Okay, so now would be a good time for you to share your question about a stock or an altcoin, whatever you want me to check out. And once I get to it in the chat, I will answer your question. Please, one question or one symbol per person, please, so I can try to get through as many symbols as possible. Okay. Also, for a fun fact, if you'd like to share what city or what country that you are joining in from, that's always cool to hear. I'm streaming from the greater New York City area, also known as Northern New Jersey, and it can explain my funny way of saying things at times. Okay, cool. So with that being said, let's get this thing started. All right, so this is for educational purposes only. For investment advice, please consult a licensed investment advisor. All right, and let me take that slide away so we can get this thing going here. All right, cool. Hey, everyone. So you guys should be able to see me now and my Bitcoin chart. Hope all is well. Let me just say hi to all my regulars popping in here. Who do I have here? Lygius, good to see you. We got Matt, Alex. Hey, good to see you. Alex, some funny stuff on the with trolls, huh? On the TradingView comments. Levent, good to see you. Okay, Peter, hey, good to see you. Got Bill. All right. By the way, the previous week it was a holiday. That's why I wasn't streaming. I was going to, but then I had like other things I had to do, so I figured no one's going to show up anyway. So, but I saw a couple of requests for the stream. So again, I apologize for that, but it was a holiday here and the markets were closed. Also, just so you know, for this month, the month of July, I'm going to continue streaming on Mondays as usual. But come the new month, I'm going to change my schedule a bit. Okay, so what I'm going to do is I'm going to stream every other Monday. So first Monday on, second Monday off. I'll remind you guys again, the reason why I have to do this very quickly is because my stream numbers are not very good, okay, to be honest with you. I've been streaming on both platforms now since March consistently. Only one day a week, I understand, but my numbers are stagnant. They haven't changed. Meanwhile, I'm watching fake gurus, one in particular that I like to watch for his marketing, and they're growing substantially, okay? And they're not doing any of the stuff that I'm doing. So yes, they're lying to people. Yes, the content that they produce, this one particular person produces good content as far as production quality, but the educational value is worthless. And anyone that follows that information is going to find out because they're not going to make any money. Okay, the guy has no experience. So I have a lot more to offer, yet my numbers stink. Okay, so I'm not here to talk about content strategy, but I just want to let you guys know I'm going to take that off time to produce some more valuable content that will be beneficial to my followers and to myself. Okay, so that's going to be next month. I'll remind you guys again, but I'm just letting you guys know now. All right, if you guys have any content strategy tips, I'm always open to hearing them. But I've been following very carefully, and I know why my numbers stink, and and I know what I have to do, but it requires time. And putting these streams together is actually very time consuming. I'm not just here talking for 90 minutes. I have to set up, I have to schedule this stuff. there's a lot that goes on before I even get on here, okay, on top of the 90 minutes. Anyway, so let's get into Bitcoin now. Let's get into this situation. I'm not going to sit here and bore you with content strategy, but it's obviously something that I have to deal with on a regular basis. Okay, so also TradingView people, if you have questions, now's a good time to start putting them in the chat, okay? And now it may be a little slow over there, but I'm watching. All right, so first things first, economic calendar. You should check this thing every week because you want to make sure you're aware of any important events. Now, this week, again, I looked at the calendar previously. There's a couple of events worth mentioning. So tomorrow is the 12th. The Bank of New Zealand has their interest rate decision. Okay, so that can move New Zealand, possibly Aussie pairs. If you're involved in those Forex pairs, something to keep an eye on. Otherwise, it's not really a big global event. On Wednesday, which is the 13th, we have CPI numbers, I believe, coming out of the US, which can be an event if they come out in some type of surprising way, that's particular can affect stocks, can affect the dollar. So you want to be aware. Also on Friday, which I believe is the 15th, we have Bank of Canada. No, I'm sorry. It's Bank of Canada is also on Wednesday. Bank of Canada interest rate decision, so can affect that pair if you're involved in any Canadian crosses. And on Friday, we have it's the retail sales report for the U.S. I mean, those are the numbers that really stood out for me, of anything. Now, again, you're not looking for trade ideas, okay, with the economic calendar. You're looking to manage risk. That's the only purpose. So if you're in any positions that can be affected by these economic events, you want to be aware, because you may have to adjust a stop. You maybe have to exit a position. That's going to depend on your unique situation, but you want to be aware. Okay, you don't want to just have an event come out of nowhere and there's a range expansion and you're sitting there like, what's going on? Okay. Number two, there are company reports that are coming out this week. Okay, there are company reports have been coming out regularly. Make sure that if you're in a stock, make sure that you're aware of when they release their report. Because that can affect the stock. Again, you're not looking for trade ideas. You're looking to manage risk. Okay, I have to make sure that that's very clear, because people, again, they always just want trade ideas. They don't realize that there's this very important component of risk that you must respect. Okay, so that's the economic calendar. Let's talk about Bitcoin, because that's what we're here for. All right, now, first things first, if you guys read my analysis that I wrote a nice little comment about trolls on there, comparing them to human waste. Yeah, never argue with them, okay? Just so you know, read the comment in my article. I'm not going to repeat that. But here is the point. So on a week ago, when I published my TradingView analysis, the market was over here, okay? And in that analysis, I said that it's possible that you can get a squeeze out of nowhere to the resistance level, right? It took the entire week for that to play out. Now, people, again, they expect someone like me to forecast some sort of accurate move. I have no idea where the market is moving next, and neither does anyone else. So anyone that claims, oh, my forecasting, oh, I know where Bitcoin's going to be, they're lying to you. You need to understand that. They don't know. No one knows. Unless you're Elon Musk, unless you're an insider that can move markets with a tweet. Okay, I can't do that, but Elon Musk can. So that's inside information. Okay, if you know what he's going to tweet. But other than that, no one knows anything. So my point is this. You need to prepare. And that's the point of this analysis here, is we define scenarios so that you can prepare for them. And then if the market unfolds in that way that you prepared for, then a trade idea can develop. At that point, you can define your risk. But sitting there from an egocentric point of view and saying, well, I know, though, the market's going to do this because it has to. The market does what it wants to do. It doesn't matter what you think. It doesn't matter how many opinions you have. It does not matter what the experts say. The market is going to do what it chooses to do. If you don't respect the market, it will take your money. Okay? Trust me, I've given lots of money to the market for those nonsensical ideas or opinions. So I have enough experience to tell you that if you don't respect the market and do not accept that the fact that the market knows everything and you know nothing, you're just going to hand your money over to the market eventually. Maybe not now, but you will soon. Okay, now, here's the point. Bitcoin went to the 22K resistance, as we have been preparing for in advance. Now, was the market going to stop there? Would you believe I saw some moron calling Bitcoin's going to go back to 100,000 and to risk 40% of your account? Like, what? Anyway, so it stops here at 22K, right? Which was a likely area for it to reverse. And on Friday, it delivers a pin bar, a bearish pin bar. I wrote actually an update. If you look at that article that I wrote on TradingView, I wrote an update on that day. And I said, if we get the pin bar and the pin bar closes, that is a sell signal. I wrote that on Friday. Okay. So the sell signal, it took another day, right? Because this little inside bar was like nothing going on here. And then it took out the pin bar low. That was the sell signal. Now, I wrote my article yesterday. You have to understand something. And any professional who knows better should also understand and agree with this. You don't just make a call just by looking at a chart and say, well, yeah, the market's going to do this. That's reacting, okay? I have criteria. So the market either meets my criteria or it does not. When I write my articles on Sunday, most of the time, the market is nowhere near any of the potential scenarios that I'm preparing for. So why would I make a call? Why would I call a long or a short if the market is not even, aligning with anything? That's what a reactionary, mindless beginner trader does, okay? So people that criticize me for that are just giving away their inexperience. So understand now, yesterday, which was Sunday, this was already taking place, right? The trade was in play. So in the article, I wrote that the trade was in play, okay? The price was much lower than this. This was, the entry price was 21,172, if you want to give it an exact price. You can round that to 21,150, whatever, okay? By the time I wrote the article, this thing was at 27 something, right? 20,750 or whatever, right? 20,850. So it was a few hundred points beyond the entry point, but I still called it a short. And I said, you have 3,500 point stop, something like that, because that should put it way up here somewhere, right? The market really shouldn't go up there if it's going to stay weak. Does that make sense? So here we are, we're getting a little bit of continuation, but this is slow. Bitcoin's been acting very erratic in here, right? The momentum has dried up. This is, at this point, we can argue that this pattern is a consolidation, right? And it's a lower high consolidation, lower high established here. As long as that lower high stays in place, a lower low has a better chance of developing, okay? Understand what I just said. Better chance. It doesn't mean that it will. You cannot think in absolutes in a random environment. We are in a random environment most of the time. People who speak in absolutes are morons in the face of the market, because the market is random, okay? So everything is a probability. Everything is a chance. But how do you gauge, how do you put like a greater than 50% or less than 50%? Because when you're at 50%, that's random, okay? So how do you arrive at, well, there's a 70% chance that it's going to do this? How do you arrive at that? I don't know how to do it quantitatively, okay? Maybe there's a way to do it. I'd have to probably speak to a quant to do that. So I have to do it based on anecdotal information, okay? And I get that information from the chart. And I consider, in this environment, I consider the macroeconomic picture, because in this environment, it's important, okay? There are some environments where the macroeconomics they're basically in favor of everything, so they don't really matter anymore. You're looking more at a technical aspect of everything. But in this situation, because the macroeconomic situation is very uncertain and it could get worse, you need to monitor it. And if it doesn't improve, you can't expect improvements in this market, okay? Especially in something speculative like Bitcoin, which has no favor in a market where the central bank is fighting inflation, okay? This thing is an anti-inflationary instrument. Have you seen gold? Have you seen what's happened to gold? So this is like the same type of situation, right? It's not favored. So my point is this. The macroeconomic situation favors a break of these supports. Because of that context, and because the structure is a lower high, which also favors a potential lower low, I can guess that there's probably a greater than 50% chance that we take out these levels, because that's what trends do, okay, right? Lower high, lower low, that's a trend. If we fail to make those lows, then maybe we have a change. If the market can't break these levels and we have a consolidation and it doesn't want to make that lower low, that's a new piece of information. But I don't know if it's going to do that or not, okay? The market needs to tell me. I listen to the market. I'm a good listener. I don't tell the market what to do. I don't think I can tell the market what to do. I have no control over that, okay? I'm a follower. I listen, and that is what you need to do. So what am I waiting for now? Well, I called the short. By the way, I'm not in the short, because I put that note as well. I don't short Bitcoin. People always say, how come you don't short Bitcoin? Because I can short other markets that are much more regulated and don't require all the hoops I have to jump through with leverage and all that other nonsense. Most importantly, it doesn't fit my risk tolerance. I don't feel comfortable shorting this thing, okay? I've seen strange things with this market, and there's no point. I don't need to go through all that effort and whatever when I can short the S&P very easily. Okay, or the euro. Have you seen the euro? Very easily. Okay, so that's that. Now, so the question is, what does the market tell us? Until we test this level, we don't know, right? So right now we took out yesterday's low, right? And we're sitting on today's low. This candle can expand. This candle can do a lot of things. Maybe the next candle, we get a bullish inside bar right there. That's something that we should not see if bearish momentum is going to follow through. Now, again, any news report, something can come out and knock the wind out of this thing. That's what the environment favors. But do we get that? I don't know. You have to bet and hope. I mean, I don't like to use that word hope, but basically, if you're betting on the environment, that's what you're betting on. And if it turns the wrong way, the trader mindset, as I also wrote, the analytical mindset and the trader mindset are not the same thing. The trader mindset is always prepared to adjust. So if you get a conflicting signal right there, okay, bullish inside bar, I don't know if one will appear there, but one can appear there. So if the market comes out and says, yeah, I'm going to put a bullish inside bar right here, and I'm going to give you a buy signal. How about that? We should not see that as a short, okay? If I was short and I saw a bullish pin bar, I'd be like, that's not what I should see. That doesn't mean the market's going to rally. It just means that I should not see. It's not as weak as I anticipated, right? So I can, at that point, I have a choice to make. I can let it play out to the full risk that I assumed when I originally got into the position. Again, trader mindset. Or I can get out earlier and say, I don't like the bullish pin bar. I'm going to get out. I'm going to take my small loss or my small gain, and I'm going to wait for another sell signal because I don't like this. This can rally and this can do this, and I don't want to get stuck in that. I mean, instead of, oh, well, it's just noise. I'm just going to sit back and get caught in something that goes to 28K. Okay. Like, again, there's no way to know. Only after the fact it looks good. Okay. We have to guess before the fact and manage risk. That's your number one priority, not making money. Okay. Again, I have to emphasize that so many times because I deal with people and they still come at me with the same stuff. It's like, man, you know what? You don't want to listen to me. That's okay. But the market is going to teach you a much more expensive lesson. And I'm going to have nothing to do with that. Okay. Trust me, I know the market is a very expensive teacher. I've spent a lot of money in that area. Okay. So that's my Bitcoin analysis. All right. So are we all clear on that? So basically, as the week unfolds, right, the setup was here. There's no setup right now. Either you're short or you're out because there's no reason to be long here as a swing trader. Day trades are another story. I'm not talking about day trades. So scenario one, we're looking for a test of the 17. What is this low here? 18,755, right? Or basically the 17K low. You're looking for a test of that low, all right? And a break of that low. It's very possible a buy signal can develop here. That would be a failed low. So if you're short, that would probably be a good time to take something off the table, okay? And then if you want to give it further a chance, give it more of a chance, okay? But take something off the table if you have that opportunity, because this is an area for aggressive longs, okay? Would I go long there? I wouldn't call one, all right? Not in this environment. As a day trade, sure. Because as a day trader, you can do a lot of things. But if you don't understand how to put this context together on the day trade time frame, don't even bother. Because what's going to happen is you're going to get caught in all the noise, and you're not going to realize where you are in the bigger picture, and you're going to lose a lot more money than you should. Okay, so the day trade mindset is like the swing trade mindset, but on steroids. I mean, you have to be prepared for lots of things. Most people are not nimble enough. Okay, or they overdo it. They don't realize, when to give things a chance. That part of that comes with experience. You're not going to get that from just a chart or putting an oscillator on your chart, some magical oscillator that everyone tries to fool you with. I want you to understand something. Hey, TradingView people, I only see one question on TradingView. What's going on there? Do I have to turn you guys off? Seriously, come on. I spent a lot of time preparing for you guys. Let me see some questions. All right. So one thing I want to say about the retail trader, understand that you have to look at what as far as like the day trade aspect goes, because people ask me all the time, do you day trade? Can you teach something about day trades, blah, blah, blah. And I stay away from it I day trade, but I don't teach it for a particular reason. It's because it's extremely hard, and you have to understand what you're up against. And if you don't, you can't win, okay? Your chances of winning are so low. Meanwhile, there are so many day trade gurus that are making all kinds of money somehow, magically, right? Understand what you're up against. And I just want to say this real quick. If you look at a professional market making firm or a hedge fund, who they hire, okay, and how they make money, they hire the brightest minds in the world, okay, physicist, engineer, statistics, PhD, okay. Now, if you're not one of those people, you can't compete, number one. Number two, what is it that they're looking at? Do you see these people looking at charts or other nonsense? Do you see them messing around with the RSI? You don't see them doing that. Why? Because retail trader tools are nonsense. They're mostly, you can flip a coin and get the same result. That means there's no advantage to using them, okay? Now, there's a way to combine them together and get some sort of context, yes, but that's not the same as an advantage. You have to understand a statistical advantage is a specific inefficiency, right? So when you hire a physicist from MIT or wherever, okay, an engineer, they look for specific inefficiencies that you can't even see, number one. Number two, they play a game that has to do with microstructure and speed so that they can keep their risk the smallest as possible and make the most consistent profits as possible, okay? That's the game that they play. That's why if you look at a level 2 quote, or if you look at like a price ladder for like something like, you know, the NASDAQ or something, it's nuts, right? Because you have algos all over the place, and what do you think they're doing? So you can't play that game. So understand that if the best of the best are not looking at charts and they're not sitting there, well, look, the RSI is oversold. What makes you think you can compete? Okay, understand that. Now, I'm not saying that to discourage you, but you need to understand how this game works. That's why I don't talk about day trades, okay? I understand who I'm up against, and I understand how they do things. So, you know, how do you find an advantage in that? It takes a lot of experience, okay? Anyway, so that's my Bitcoin stuff. That's my market maker rant. Let's get into some of your questions now, okay? Man, TradingView people today. I don't know. I only have a few people watching me on there. This is why I wasn't streaming on Monday. Okay, so let's see what we got here. Elijah's, good evening. Okay, cool. From Lithuania. Thanks for joining us. So ZN1. All right, good question. I'm glad you're looking at the 10-year note. Okay, now look at this. So the 10-year note, we're going to zoom out on this a bit. I've been telling people to watch this thing, right? Because this is where the party starts or doesn't start. And let's look at this. This thing in recent time, I've obviously been making lower low after lower low. And that means interest rates have been rising, right? And the bond market has been pricing in a rising rate environment. Okay, now, more recently, there was this, okay? And that can throw a lot of people off. Because they're like, oh, bond market's rallying. Everything should be good now. Let's all start investing in stocks, whatever. Okay, but the bond market hasn't taken out this resistance. So understand, you know, yeah, we can have a little mini rally, but if resistance levels are respected, you could say, well, what about this one? That's a minor. That's all minor. This doesn't really mean anything, okay, this stuff right here. Remember, the bond market takes a really long time to do things. It can take 3 months, 6 months, to really show us something meaningful. So you have to understand when it produces something of noise, that noise takes a long time to unfold. And that's what I suspect this is, because here's the thing, is the bond market pricing in rate cuts from the Fed? I mean, what is it pricing in here? Why is it calling for lower rates, right? Why does it see that? What is it pricing in? The bond market is smart money, right? So they know more than us. So at this point, though, right, just judging from the chart, and we know the environment hasn't changed, I have to suspect that until we start taking out a significant resistance, like this number right here, which is what, 120.27, around there, until we clear it, okay, we can still argue that the trend is bearish. I mean, look at a weekly chart. Here's a weekly chart, okay, with those same levels. So right now, that's still a lower high, okay? Lower high is likely to lead to lower low. We may consolidate. Maybe, you know, maybe the bonds are waiting for certain economic puzzle pieces. Like I said, we have retail sales on Friday. We have CPI on Wednesday. Those can affect the bonds, because if the market perceives that, if that information can shape the Fed decision, because that's what they look at. We had NFP on Friday, right? NFP came out good, more jobs, everyone happy. But if you can't take that at face value, because why? That's not good for the Fed, because the Fed says, oh, more jobs, we're not raising rates enough, because that's going to create more inflation. Raising rates, going to raise rates more, right? So that's you need to understand that. Oh, but the jobs number was good. I don't understand why it's selling off. Because the market knows that that's bad for the Fed, okay? Rising rates are bad for everything. So if it gives the Fed, if there's no argument for the Fed to stop raising or start lowering, then things are not going to improve as far as prices go, not for any time soon, until that game changes, okay? And it will change at some point, because they're governing the business cycle. They're doing what they're supposed to do, fight inflation. Now, so if you look at the bonds in the weekly chart, there's a lower high up here, and we can still argue, right? Today's Monday, it's just the beginning of the week. Yeah, inside bar, potential high or low, but this can easily turn and test that low again. So I wouldn't make any big deal of this at all. This means nothing, okay? So as far as bond market goes, I would say that it's possible range with a lower high established, okay? Until those highs are taken out. And even if the high gets taken out, let's say over the next few weeks, this gets taken out. Oh, higher high in the bonds. That is a new piece of information, and it's interesting. But do we fail over the next, like what happens? Do we get a failed high up here and basically establish just a little bit higher part of the range and then watch the bonds test the low again? I don't know, right? I can't forecast that. The market needs to tell me. So that may take another couple of months. We have to see. But that's what I suspect, because this trend is so bearish. Generally, number two, the Fed is on the side of raising rates, right? So bonds are not going to rally much if the Fed continues to do that, okay? If the Fed starts changing their talk and the bonds see other information that would imply that the Fed is being too aggressive and they're going to have to hold back at some point, then okay, maybe we get a break and then maybe the trend changes. But often, these things consolidate. I mean, look, let me give you an example real quick. Over here, you could have argued, oh, look, resistance break, high or low, new trend, no new trend, okay? It went back to that low and it broke. So just keep that in mind, okay? So good job keeping an eye on the bond market, but those are the scenarios I'm looking for. Does that make sense? Okay, so good question. Let's move on here. Okay, Matt from Chicago. Hey, cool. Thanks for joining. Short-term bearish on the NASDAQ. Okay, well, I mean, I would definitely agree with that. Let's take a look at the NASDAQ. Let's go to the daily chart. Now, so your question here is, but midterm, I could see a real, okay, wait for the higher low. All right, so here's the thing. Look, first of all, NASDAQ right now, this is a CFD. Okay, you can use this. It's a good chart to use. First of all, you got a double top. Okay, you have this rally, by the way, this is complete nonsense, okay? This is just overreactive, reacting to some nonsensical news, noise, basically. Why do I say that? Because look where it stopped, okay? Right here, double top. Not only that, but this resistance here, right, is nowhere near this. So as long as this stays intact, you should be bearish, okay? I mean, you certainly shouldn't be bullish. There's no reason to be bullish. Any fool that's buying into this, I call them fools because they're not aware of what's going on. They're buying too early, okay? Now, there's never a bad time to invest, but if people are going in aggressively, now's the time, yeah. Market, how much lower can the market go? This market is there's no evidence of a bottom, okay? This is not a bottom yet. Although, yes, it is. It's the bottom. That can get tested, okay? Especially with a lower high double top. I would be looking to short this. In fact, this is a short signal now, okay? You have this low at, what is that? 923. That was the low yesterday, or Friday's low. This thing is at 825. So there is a sell signal in play on the NASDAQ. Your risk, of course, would have to be defined from up here. So yeah, this thing could go to 12,100 and stop you out. It's possible. We have a lot of news coming out this week. Like I said, some big company can say something and that's going to move the NASDAQ. So just keep that in mind. They can also say something negative, right? And the way this is setting up here, right? Company stuff aside, this is setting up for a test of support, okay? Which is this. What is that? 13, what is that? Oh, 317. Okay, see that? Similar to Bitcoin, right? Not too, it's very similar. But Bitcoin is following the market for people that aren't aware of that. And I always have some moron troll comes in, hey, Bitcoin has nothing to do with the stock market. Okay, moron, good thing I'm not following you. In fact, the next time I buy Bitcoin, I would suggest you sell it. All right, anyway, so let's move on here. Good question. I hope that answers your question. So yeah, so as far as going short, there's a sell signal now. But you say wait for a higher low around 11.5. I don't know what you want to do at the higher low. I certainly wouldn't be buying it because structure favors a break, okay, of that support. Doesn't guarantee a break, but it favors one. So if you're going to place a bet, I would be betting against the support hold and I'd be betting for the break. I like shorting the NASDAQ, by the way. Okay. All right. So let me go take a look at TradingView here. Okay. Freeloader. Hey, good to see you. Euro. So yeah, Jude, I was looking at Euro. I can't believe where the Euro is. Okay. I was trying to short this thing and, shorting in this area here is very aggressive because this thing can easily bounce. I saw that pin bar on Friday. Oh, I forget this thing. I'm not shorting this thing now, and gave it right back. This thing's got problems. Do you realize that if you short the Euro, because of the rising dollar, you actually get interest on that, or the swap is favorable, right? You get a positive swap because you're long the dollar and short the Euro. The broker actually has to deposit some money in your account. Okay, it's called carry trade, by the way. So yeah, that's when you compare the interest rates of both currencies. So anyway, this thing got hammered here. It took out that pin bar low. There's no reason to be long. All right, so if you're short, I would hold on. I mean, this thing's at par with the dollar. We're at 1.0046. We're almost 50 pips away from being at one even, right? That's nuts. This thing hasn't been here in 20 years. Here, let's take a look at the weekly chart. Okay, look at this thing. So I wouldn't be buying, that's for sure. Can this thing bounce? It can, right? Because it's such an oversold, and plus, the $1 price is going to be a big psychological level for this thing, and it's again only 50 pips away there. But is it worth trying to step in front of this thing, saying, "Well, it's definitely going to hold"? No, the momentum is extremely bearish. Okay, so opinions will not help you in this game. If you're interested in the long, at least wait for another pin bar. Okay, at least at minimum. And if you take the long, it's extremely aggressive. Okay, I wouldn't expect much out of it. Otherwise, if you want to go for the short, selling it now is also extremely aggressive. How can both long and short be extremely aggressive? Because the location here is high risk for shorts. It looks like a great short right now, but it's also buying can happen for whatever reason. Some news can come out, right? There's a bunch of news events this week. Something can come out. And just like this pin bar developed yesterday, you can get a reversal like that, right? You don't want to take that chance. I wouldn't take that chance, right? Because the potential for a squeeze is very high. So what you want to do, the more conservative thing, is look at the old support, right? Which is right there. What price is that? 103, 103.5, okay? And you're looking for a test of this area. A test of that area, just like Bitcoin testing 22K, a test of this area would be a higher probability sell or short setup if the market will produce it in that area. That's where I'm looking for the next short on the euro in a more conservative way. Otherwise, you look to day trade and try to get whatever you can here and there, but it's risky on both sides at current prices, right? So lower risk, higher probability for shorts is up here. If you're going to go long, at least wait for a buy signal and don't expect much. Like you could say, well, if that's where the resistance is and we get a pin bar right here, I'm going to buy it and then I'm going to just hold it till it goes here. It might not get there. Okay. So again, the trader mindset is not about maximizing your profit. It's about adjusting to when the market gives you a conflicting signal. That's really where the skill is. Okay, people, again, no one's going to tell you that because most of these clowns that are in this game don't even know that themselves. All right, so that's the euro. Thanks for asking. But yeah, it's so interesting how the euro is getting so hammered. Oh, you wanted euro Aussie? I'm sorry, but it's probably looks similar. Anyway, that was a nice analysis on the euro. I'm sorry, I can't see. Let's take a look at euro Aussie. All right, let's go look at the weekly. I'll do this real quick. So look, euro Aussie. Right. Again, you have New Zealand coming out with their rate decision that can affect this pair, obviously, because Aussie, Australia is like sort of relative, right? You have this resistance right here. You have this large outside candle, bearish. This is a weekly, right? So I certainly wouldn't be looking for longs after something like that. Okay. This current candle on the weekly, I mean, it's only one day for the week so far, but the current weekly candle is an inside bar. So if that closes like that, or you get something similar and that low is taken out, that would be a sell signal. That would be a continuation pattern. Okay, momentum continuation. This thing is generally, I mean, I'd say midterm, actually long-term bearish too. You have lower high, right? Break, lower low, lower high. So short-term and midterm are both bearish. So I would be looking for the short signals. Okay, long signals, if you take any, like you can argue right now, well, look, the higher low. Okay, understand what you're dealing with on the bigger picture. Again, this is when it comes to these trade ideas on the swing trade level, it's really context is very, very important, right? So you need to really be in tune with the bigger picture and not get confused by conflicts on the smaller picture, because yes, that's a buy signal, okay? But you're buying into something that has great bearish potential. Does that make sense? So the buying potential is very limited. If as a day trade, that's another story. But as a swing trade, very risky. Does that make sense? Okay, so that's that one. Sorry again, I got the wrong pair initially. But you can all use some euro analysis. It's important. All right, so let's take a look here. Freeloader, ENPH stock. Let's take a look. ENPH. What's the story with that? Let's go to, is this the weekly? Let's take a look at the weekly, see the bigger picture. Okay, by the way, so my analytical method has 6 steps. I'm actually applying them here without saying step by step by step. And some steps I skip, okay, because they're not even worth mentioning. But I just want you to understand, I'm not just randomly looking at stuff here. There is a process going on here. All right, now, end phase energy. So let's see what the story is. I see long-term generally bullish. Midterm, I would argue, is range bound, right? Range low is right there. Range high, we can argue, is up there. At the moment, you're stuck in the middle of the range, and there's a resistance right here. And it's trying to give you a failure there, okay, on this. I mean, again, we only have 1 day of this week, but that looks like a failed high so far, okay? So at this time, aggressive, I would look for a short, but keep in mind, you're at the midpoint of the range. Midpoints are highly random, okay? But you do have some evidence of resistance here. So you do have that argument in your favor. You have a daily inside bar, which is now what's going to be closed here in 20 minutes. Okay, so you take out the low of the current candle, 203.5, or the previous candle, 201.14, you're going to have a sell signal. Okay, that will be a sell signal based on the way I look at things. And you can measure potential from this low over here, which is what, 168? That's a pretty decent mover. That's a nice choice for a swing trade. Of course, you have this low here, but you don't want to be overly optimistic with these things. Don't sit there and say, well, I'm going to hold it all the way to the bottom of the range. It may not get there. Okay, again, this game is about adjusting, all right? So there's a sell signal potential, right? Potential sell signal developing. Risk can be defined easily from this price up here, 220. You can round it to 220. So price should not be going up there, okay? So if you get short at 200 and it goes to 220, you should get out and take the loss, all right? Because then this thing may break out for whatever reason and go higher. But that's what it looks like. Now, they're involved in energy, I guess, and oil's been all over the place, right? Oil's been getting hammered in very strange ways. So if there's further weakness there, that may also add to the argument here. Okay, does that make sense? So I definitely want to be in tune with oil. So thanks for mentioning. Now, again, I don't know how ENPH, I don't know if they're, what kind of energy they do. But if oil is something that's supposed to help it, then keep in touch with oil. All right, let me see what else we got here. I know you won't short Bitcoin, but as you think 14K thing will happen, and I want to profit that knowledge if we think, okay, so like I said before, and should we short alts? All right, that's a good question. Now, again, I don't know if we're going to go to 14K or 17K. All I know is with Bitcoin that the structure favors that possibility. Those levels are in range. Okay. Now let me point something out. Back to Bitcoin here. When we were at 40K and we were at 38K, I wasn't calling for 14K, was I? Or 25K, was I? Right? Because those numbers, even though we eventually got to them, they were not in range, right? So when I see people criticizing me, say, well, he's just a manipulator and he's just calling it like everyone. If the number's in range, I'm going to mention it, right? That's why the title is 14K in play or something like that, because it's in range and it's a possibility. That's all, right? So to answer your question, will it get there? I have no idea, like I said before, but the market favors that. So if you're in a trade and you're short, at this point, there's no conflicting signal. Your job right now is to be looking for conflicting signals to adjust your risk. That is what you should be focused on, not profit. I mean, you write in here, so I can profit. You are more likely to lose if you're so obsessed with profit. Stop trying to maximize the trade. I mean, you're obviously new, so most people, you could be in this game 5 years and still not know that. It took me probably about 15 years for that to sink in for me, okay? Because I was like you, profit. Meanwhile, I wasn't making anything, okay? So it should be risk and adjust if I'm wrong, adjust if I'm wrong. What does wrong look like? So this isn't wrong yet. I don't see a bullish pin bar. So you let the market do its thing. If it wants to push that low, it will. If it doesn't want to, then it will give you a conflicting signal. Focus on the market, be a listener, okay? Now, and as far as your question, should you short altcoins? Well, let's take a look at Ethereum real quick. Now, as you know, the altcoins should follow, right? Because these altcoins, they certainly don't trade on their own now. They never have been able to trade on their own, and there's good reason for that, right? So they follow Bitcoin. Here's Ethereum, looks just like it, right? So if you're going to short an altcoin, yeah, it makes sense. You're going to use Bitcoin as your gauge. And if Bitcoin gives you the conflicting signal, you should expect the conflicting signal in the altcoin. So basically, an altcoin is nothing more than a mini version of Bitcoin, okay? That's the way you have to treat it. So, you mentioned Cardano. Let's see what that piece of garbage is doing these days. Oh, this looks horrendous, okay? So all those fools that were called, oh, Cardano's going to bounce, or Cardano's one of the better ones of the altcoins, you've been fooled, okay? So this, I mean, it's consolidating. What price is that? I guess around the 43-cent area. If Bitcoin breaks, this thing's most likely going to break, and that's a lower high consolidation likely to test lows. I mean, 30 cents, 25 cents is in range. I'm not saying it's going to go there. I don't know if it's going to go there, but it's certainly a possibility, okay? I would say at this point, I would say it's a greater than 50% possibility. I'm betting that it's going to be less random, that it can actually get to that number, all right? Based on the structure, based on the environment. There's no reason for these things to rally. If they rally, it's most likely as a result of some kind of hype or some kind of overreaction, right? Until the environment becomes more supportive, it may take a year or more for the environment to really become supportive. And at that time, when the environment eventually, right, in the business cycle turns, the markets, like the stock market and whatever, are still likely to be pushing lows at that time. Let that sink in, right? The environment may be improving, but the market may still be pushing lows, right? Because the effects haven't been felt yet by the market. But what I'm anticipating, though, is the bond market should be giving us another picture first, right? The bond market health should be improving, even if the stocks are pushing lows. If I see that bond market health improving and the stock market pushing lows, that's the time to invest a little more aggressively at that time, because everyone is going to be extremely bearish and shorting into those lows, and you're going to see like analysis and forecasts. Bitcoin's going to go to 0. The S&P is going to go to 500, whatever, nonsense, right? You're going to see extreme forecasts usually, and that's often when the real bottom comes, okay? There's no way to know that in advance. And when the real bottom puts itself in, there's no way to know that that bottom is the real bottom until we get some tests of it, which again can take a couple of months. So understand that. Okay, everyone, again, where's the top? Where's the bottom? There's no way to know. The market needs to produce it, and then the market needs to test it. It's a process. It takes time. Okay, that's why I keep telling people, staying tuned with the macroeconomic fundamentals, because changes are likely to occur there first. When we peaked on Bitcoin and we peaked in the stock market, the economic situation had peaked much earlier, okay? But no one was paying attention to it. I was. Go back to my previous streams. I was talking about the bond market. No one paid attention to me, okay? You want to know why? S&P was pushing new high after new high after new high after new high. Apple new high. Google new high. These things were making new highs. So anyone that comes out with any kind of bearish warning, they don't want to hear it. Oh, the market's making new highs. What are you talking about being bearish? Oh, new highs, new highs, new highs. We see all those fools that invested at that time. How do you like those investments now? Okay, a lot of them are getting banged out. They're getting margin called out of there because of their worthless opinions. Okay, how many clowns have I seen on YouTube? This one in particular saying that there was a more than 70% chance that Bitcoin would be at 94,000 in February. I'm still waiting for that one. Okay, maybe he meant next February. No, actually he meant this previous one. What a moron! But people believed them. Okay, I saw all the flaws in his analysis. I called it out. You know, not specifically, but I mentioned it in my streams at the time. And Bitcoin's going to go higher. Okay. So anyway, so you understand my point. I know I'm getting sarcastic right now. Let me move on here. But anyway, so I hope that answers your question. That was a good question. All right. Freeloader, if you have extra time, I'd like to ask regarding observation. Okay, dollar around 108 right now. BTC around 20,500 right now. Yet when BTC was 2,500 June 20. Okay. Okay. Then question now, if dollar is higher than 108, yet BTC is the same. What does this mean from your perspective? Does it mean the dollar is going to push significantly higher? Okay, now the dollar, so these things don't move together one-to-one. Let's take a look at the dollar index. They don't move together, all right? You have to understand. Look at this thing. This thing looks like Cardano 9 months ago, okay? The dollar, this is the US dollar. Do you know how much money it takes to move this thing? It's nuts, right? No wonder why the euro is going to zero. So look, it doesn't matter why this is occurring, but this has been occurring. And the dollar is, so this puts pressure on everything, but the pressure is not felt at the moment. So even though the dollar has continued to rally further, and you're saying, oh, but I don't understand. How come Bitcoin hasn't broken? It's putting pressure, and that pressure builds, okay? So at some point, if some sort of catalyst comes out on Bitcoin, oh, Elon Musk says he's never going to touch Bitcoin again, or some other nonsense, right? That's all it needs to give it that push because of the pressure that's sitting behind it. That's the way I picture, you know, that's the way I take that information. So you can't sit there and say, well, the dollar here and Bitcoin there, it doesn't make sense. Don't look at these things one-to-one, okay? That's not, there's a lot of there are a lot of variables. It's not that simple. And there's no way to know all the variables and all the factors. You know, maybe some financial modeler can figure it out, but I can't. So I do know that the dollar has been putting pressure on everything for quite some time, as I've been watching the dollar rise and rise and rise. And as you can see, it has its effects over time. This, of course, is a result of rising rates, right? And the Fed has no intention of lowering or stopping that rising rate situation anytime soon, which means likely the dollar is likely to go higher. Should you buy the dollar now? I wouldn't buy the high of the dollar like that. That's nuts, right? There's just like shorting into the bottom of the euro, but it can go higher. This trend is very clear. So you should be looking for pullbacks. Like with the euro, you get a bullish retrace on the euro. I'd be looking for that first short. Okay, we said 103.5. That would equate to a dollar, because the dollar and the euro are more in sync. Okay, because that dollar against the euro, so they're going to be inverse. They're going to be in sync right? So dollar pullback to here is probably a euro shorting opportunity. Does that make sense? When I bring the euro into the picture. So the good question. That could be very confusing for people. All right, let me jump over to the other chat. How am I doing with time here? Let me see how many people are having TradingView. Man, what's going on there? No one's on there today. Guys, do me a favor. Help me out. Press that like button or something. That's why I hesitate with TradingView, because a lot of time goes into this. And, anyway, all right, I'm not going to sit here and complain. Let's move along. So, hey, Alex. Okay, update on 2498 HTC. What? Okay, said $49. Oh, okay. So let's see what you're saying there. I'm going to put that here so everyone can see it. Update on HTC Corporation. Hey, by the way, trolls who watch this, look what this guy says here. Perfect entry, 30% profit since then. Okay. All right. So I appreciate that. All right. So for those that say, I'm just a market manipulator. I wish I could manipulate Bitcoin. Man, I'd be doing much better. I wouldn't have to be doing all this content strategy nonsense. All right. So Levent from Turkey. Okay, cool. Got my Turkish following over there. We've been watching that Turkish lira. So thanks for joining. All right. 25%. Okay, no problem, Alex. Again, thanks for sharing. Peter, okay, good to see you. All right. Bill from New Smyrna Beach. Okay. Armin, hey, good to see you, Armin. Go forth. Hey, go forth. How are you? Haven't seen you in a while. I knew your Seinfeld impression as well, but how brutal you can be. You like that, right? I was proud of that paragraph that I wrote about trolls, comparing them to human waste. But come on, there's no place for troll. When someone goes onto a public platform and aims to subtract from your experience, I got a problem with that. I guess because I've been misled for so long about things. People that try to subtract from your learning experience, they bother me. So, anyway, yeah, glad you like my Seinfeld impressions. I really like, tough but fair. It's true. Because again, the point of that is people should police the community. If you want a better learning experience, don't argue with these morons. Report them to a moderator, because they're taking away from your experience. Look, I don't need to put stuff on TradingView. I know what I have to do, okay? I don't need to share anything with anyone. I don't have to do it. So, but people that go on there to learn, your experience is being compromised. I would be tougher on them if I ran that thing. But I guess, they of course, TradingView looks at things from traffic numbers and engagement, and, they're more interested and worried about that kind of stuff, right? I understand they're running a business, but still, just as far as the educational quality, you really should take it upon yourself to police the community and just be on top of these people that are taking away from you. They're not taking away from me. All right. I report them sometimes too, if they say some really bad stuff. All right. From New Zealand. Hey, Mark Chu from New Zealand. All right. So New Zealand dollar, as we talked about, New Zealand dollar. Remember, you got me short in that thing a few months ago when I got stopped out. I'm not blaming you. I'm just joking. But as we know, they're coming out with their rate announcement. What was it? Tomorrow night. I mean, this thing is getting hammered, right? Going into that rate announcement. The short was eventually right. Let's take a look at the weekly chart. So look at this thing. New Zealand against the dollar. Man. So you have the lower high. This thing is making the lower low. All right. High risk place. These things have made some very significant moves. I mean, we haven't seen moves like this in the currency market all over the place for quite some time. You had the bullish pin bar develop, just like on the euro, right? And it failed. It gave it right back. So that's definitely it reinforces the weakness. So what do? Well, like I said, shorting now is extremely aggressive on the swing trade time frame. If you're experienced enough to day trade and you want to give it a try, I mean, momentum is bearish, right? So you can look for sell signals on smaller time frames, but don't expect much out of them, because a buy signal can develop here very easily. And that's what I don't like. So if I was looking to take a trade on something like this, just like the euro, I wouldn't take the buy signal, not as a swing trade, right? You may get a bullish inside bar, right? Again, there's a bunch of news coming out this week. It can easily happen. And then you can get a leg up, right? A leg higher can unfold over, it may take an entire week, just like that Bitcoin move from 19 even to 22K. It took the entire week to get up there. And again, people are making all kinds of nonsensical, opinions and blah, blah, blah. And it's just a average noisy move. It doesn't mean anything, right? So in something like this, I would be looking for resistances, right? Some minor resistances in this area right here. That's a proportion, by the way. So what is it? 63, 64 area. Then you have this upper area right here. That's right now, that's your key resistance. So theoretically, if this thing is going to stay bearish, it should not clear that area. So that's going to be your high probability setup area right here. That's what you need to wait for. Something like that can take 2 weeks, right? And now, so when greed enters the mind, you know, oh, you know what? I know what I'm going to do. I'm going to buy this thing and I'm going to hold it to all the way up there because that's where it should go, right? Market doesn't have to do anything. It may get up there. Remember, the scenarios are countless, right? They're infinite. You can have, it may run up a little bit and turn. It may run up a little bit more and turn, a little bit more and turn. There's no way to know. So you let the market find its next level. Let it give you a sell signal, right? The more aggressive sell signals will be around here, right? Meaning they could still turn in your face, right? They're less likely to follow through. The more conservative sell signals will be up here, where you can take you can get a better reward risk if, I have to emphasize, if the market can give you that opportunity. Okay, you don't make opportunities in this game. The market gives them to you. All right, the market presents them to you, and it's up to you to work with them or not. You don't have to. You don't have to take a trade if you don't want to. You're in control, right? Or you should be anyway. All right. So anyway, good question. That's New Zealand dollar, and thanks for joining us. Okay, dramatic move is going on, sir. Oh, Shayshank. Yeah, in what? Dollar, very strong. Yes, Kim, that's true. Alex, a lot of people just want crystal globe. I don't get it. How can people actually think someone can know every little move in advance? I'm going to tell you why, Alex. I'm going to tell you why. Why do people ask that? I haven't done any Seinfeld impressions. I love Seinfeld. People need hope, okay? I spend time watching fake gurus, not because their content's nonsense, complete nonsense, but I'm watching for their marketing efforts, right? And their messages. And because I'm not looking at guys that have like no following. I'm looking at guys that have a very good following and people that have grown. I've watched them grow significantly over the previous year, while at the same time, I have barely grown. And I have so much more to offer than these morons do, okay? Not only that, it's not only that, the information that they're sharing technically won't help anyone, right? It's like watching a cartoon. Yeah, it's fun. It's interesting to watch, but you try to make money with it, you're not going to. I can almost guarantee that. It's random, right? You can't beat random. Anyway, so I watch, and the key thing that most of them bake into everything that they do is this message of hope. And they share this message in many ways, right? They'll say, well, this oscillator, I mean, I'm making money with it. That's hope, right? You're not making money with the opposite. You're not making money consistently with the oscillator. The oscillator is random. Anyone should know that. But if you don't know any better, maybe that must be like a special way of using the stochastic oscillator. And he used it with this moving average. That must be a special thing. So it plants the seed of hope. I'm going to try that. And then if you make one good trade, it works. It works. I have the thing that's going to work. And then it doesn't work, okay, anymore. And then you're just in the same spot as you were. I've went through that process for more than 10 years, okay? So I can tell you most things don't work. And it makes sense. On the retail level, why would they work? Retail traders are not here. The purpose of a retail trader is not for you to make money. It's for you to make money to make others rich, okay? So they feed you all this nonsense. Anyway, it's the message of hope that's baked into everything. So when you see that somewhere, whenever they imply, all you have to do is work hard and you'll make money too. Start out small, only $100 a day, and you can make $1,000 a day. Just hard work and really commit yourself. Nonsense. Okay, this is not a skill-based game, as I've said many times. This is a chance-based game mostly. The skill is not where you think it is. I have to repeat that often. Okay, so anyone that tells you that, again, they're planting a seed of hope. And that is what people want, hope. okay? Especially when you need to make money and like, you're not making enough money at your job or something or whatever, or you don't have a job anymore and you need to make money, that hope becomes even more appealing, right? So please, and I noticed this is very big in the day trade community, very big. I see that message of hope all over the place. It's sad. All right, let's move along here. So that was a good question. Where was that? I don't get it. How can people actually think someone know every move in advance? Right. All right. I'm moving along here. Okay. So let me just catch up. I'm just catching up on the chat. I just skipped a bunch by mistake. All right. Shashank, fake out chances are high. Well, what in Bitcoin? I mean, at this, I wouldn't say chances are high for a fake out where Bitcoin is right now, because everything points to the bear side. So I would say fake out at this point, I wouldn't say they're particularly high. I'd say they're 50-50, okay, which is random. It can just come out of nowhere. A high chance of fake out is like when you test a high or test a low. That's where the chance of the fake out is much higher, meaning like you get the break, like a lower low, and then it reverses. There's a high chance of that happening in that location. There's a order flow reason for that, okay? Hey, Scott. Hey, good to see you. Long time no see. Why not? How are you? I remember you. Why not? How can I forget that name? What's your take on silver? Thinking accumulating small inventory. Okay, gold and silver. You saw the dollar, right? So let's take a look at silver. XAG USD. I appreciate these questions, by the way. XAG USD. So silver. What's silver at? Okay, $20, $19. Getting hammered. Now, silver, this is no surprise, okay? Silver is going to behave this way, just like gold got hammered, right? Gold went below, what, 1750 or whatever it was? Gold was coming from basically the 19s. Everyone was saying gold was going to go to 5,000. Complete nonsense. I was telling people to stay away from gold. Why? Strong dollar. Don't fight the strong dollar and a Fed that's behind it. Anyway, so as far as accumulating, when it comes to gold and silver, I mean, those are really long-term, really not good for short-term trades, although you can use the CFD. Let's take a look at the weekly chart. Okay, so silver. Is this the weekly chart on silver? There we go. Now, I mean, look at this. Oh, that's not silver. Hold on. XAG, USD. Weekly chart on, I was on the weekly chart. So here's the thing. You're coming into a support, okay? Support was at 18.5. Was an old resistance on silver. You're coming into that now. You're only $1 off of that. So your question is, you want to accumulate small inventory. Understand, when it comes to inventory, there's never a bad time to buy, when you're investing. But understand your environment. So the environment doesn't favor this, right? So there's no low in sight. While you're buying into a level that a bottom can eventually materialize, right? You're in an area where it's more possible. Keep in mind that there's no change in the environment anytime soon. So how is this thing going to find a bottom? How is gold going to find a bottom, right? At some point they will, but it's not there yet. So my suggestion, again, I can't give you trade advice, but my suggestion is if you want to start buying inventory into silver, small. Nothing wrong with small bites. You want to buy silver bars, whatever, however you're going to do it, physical. You want to do it with CFDs or not. I don't think they're a good idea for long term, especially if you have to pay swaps on them. That kind of thing, that's not good. So small. And as silver finds its lows, right, you can get some at cheaper prices. Give yourself a schedule and also allocate an amount of money preset in advance. So if it's $5,000, okay, I want to buy $5,000 worth of silver. You're not going to buy it all at one price, right? You buy a little bit at 19. You buy maybe if it goes to 18 half, 18 even. You buy a little more, but don't use price. Use time. So you say, okay, beginning of the month for the next 6 months, I'm going to buy $1,000 worth, or I'm going to buy $500 worth. With $5,000 allocated to that, right? If you're going to buy $500 worth, that gives you 10 purchases, right? So you could say, okay, for the next 10 months, I'm going to buy $500 worth at the first of the month. I don't care what price it's at. So you're going to have an average price, right? Silver may be a little higher, maybe a little lower each month that you buy it. And you're going to be accumulating at low prices rather than, good thing, rather than accumulating up here. right? Like a lot of fools do. Or think, oh, this thing's going to be, silver is going to go to 200, blah, 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 blah. That's who buys up here, okay? So you're buying in a smart area. It's just the environment is not favorable, meaning you can probably get better prices. So markets don't usually just bottom out like this and say, okay, we've got a bottom. You had this situation over here, right? No, but it bottomed out there. What do you think that was? That was the Federal Reserve stimulating the economy with stimulus. That's inflation. Silver will react to that. The Fed is doing the opposite right now. Okay, so there's no reason for this anytime soon until the Fed changes. And the Fed is probably not going to do it as dramatically as this. Okay, so remember what was going on at that time. The Fed, we're going to throw as much money as we can at this economy to make sure that blah, blah, blah. They were mailing checks to everyone here in this country. They were mailing stimulus checks. We got a couple of them. Where do you think that money goes? That's inflation, okay? And the markets knew that. So that's why you had all that nuttiness at that time. We're the opposite of that. And like I said, when the Fed does turn when they turn around and they start to stimulate again, it's probably not going to be that dramatic unless there's some catalyst for that. Does that make sense? Okay, so that's silver. Thanks for asking. All right, let me see what else we got here. James from London. Hey, how are you, James? Good to see you. Oh dear, I'm going to have to drink some tea. I'm joking. All right, I don't want to make fun of my Londoners. I got London people following me here. I love people in London. All right, let me see. The dollar has been so strong, but its rise, okay, maybe we are close. Please, can you give your perspective on the price of Bitcoin and stocks? Okay, if the dollar makes it, all right, again, dollar, that's an opinion, right? Sure, we looked at the dollar before. Dollar's on its highs. Sure, dollar has to pull back. But the thing is, the trend, just because we get a pullback in the dollar, right, doesn't mean the trend is going to change. We had a pullback over here. Oh, dollar has topped out, right? Dollar hasn't topped out. So we can get pullbacks, but that does not mean bearish. And again, to get a bearish dollar, I mean, I'm talking bearish dollar, like this situation over here, okay? Again, that requires inflation. That requires things to devalue the dollar. So we need a Fed to say, no more interest rates hikes. We're going to lower rates. That's what you need right now, okay? You can't have a rising rate Fed. You're not going to get a trend change in the dollar, all right? Unless there's some other kind of catalyst that's going to, outweigh the Fed. But I don't know how you would outweigh the Fed. I guess it's possible, but I don't know how. So I would not sitting there having an opinion and saying, well, the dollar is so high, it can't go much higher. It's got to top out. Don't think that. The dollar can go as high as it wants to go. No one thought the euro would be at par, right? Oh, the euro can't go much lower than 108. Oh, the euro can't go much lower than 105. Here we are at $1. Kramer, I have euros and they're becoming worthless. What do I do? All right. So anyway, let's move along here. A Seinfeld impression for the day. All right. Okay. So Ying. Hey, Ying, how are you? Aren't you from like Italy or something? From Spain. That's it. Spain. Have a look at oil, please. Sure. Oil. So USD WTI. USD WTI. There it is. Oil has been nutty, to say the least. How am I doing with time? Okay, a few more minutes. And I'm going to cut this off. All right, so let's take a look at oil. 1 minute I'm looking at oil, it's at 120. Next minute I look, it's at 100. Then it's at 94. I'm like, what is going on with oil? Understand, oil is a geopolitical, has a high geopolitical sensitivity, and it can do a lot of things that can go way beyond logic. Never use logic with oil. All right, because oil is wild and there's a lot of factors and things that you may not know about that can affect the price of oil. So let's look at the technical side though. So oil is basically in a range, all right, on the midterm here, the midterm trend. Broad long-term trend, clearly higher lows, higher highs. Oil is still generally strong, right? Midterm range bound. Short term, we can argue oil is bearish, right? Because why? We have a lower high established, there's a lower low. But just because there's this minor bearish trend, it's still inside the bullish range. Okay, this is why context is so important on the larger time frames, like swing trades or position trades. You need to recognize that, because you're going to have a lot of fools and a lot of clowns calling for a bearish oil, but oil is not exactly bearish yet. Okay, it may turn bearish if it breaks this range low, but right now in oil, I mean, you have two situations here. Oh, sorry about that. Hold on. You have a potential buying area over here. Okay, what price is that? 94, 95 area, right? So that's a potential long area if that's aggressive, because you're fighting the short-term trend. But if that holds, you know, this thing can go back into the midpoint of the range. So that's really like what we'd be interested in as a swing trader. Now, if you want to look at the short side of this, which is also a possibility, I just finished talking about, you know, how the bigger picture is bullish, but the short-term momentum, you can argue, is bearish. So you have to decide how you want to manage that risk, but it's trying to give you a sell signal and a potential lower high right here. If it takes out this current low of 100, you may test these lower prices again, right? And that's where it can fake out and give you a failed low and maintain its range for another leg higher. Now, again, like I said, with oil, it's really hard to play the logic game. You shouldn't even bother. Some news can come out, something can change, blah, blah, blah. Next thing you know, oil's back at 120, right? So don't try to guess where it's going to go. You decide, do you want to play the long side? Do you want to play the short side? Okay, the bigger picture favors the long side, but from these levels. The shorter term picture, the smaller time frame, favors the short side, but the potential is probably going to be less. Okay, because your profit targets are going to be somewhere near these lows. If you want to give it a chance to make the lower low, you can do that, but you're taking a big chance that this thing reverses in your face. You can give it a chance. If it reverses, you get out. You understand how that works? So again, it can be confusing. You have to decide which side you want to work with, and then see how the market goes from there. I mean, if I was playing this on the short term, I would be open to the short, right? But understanding that this thing can turn at any moment, and you know, it's a very aggressive short, because the bigger picture is still generally bullish, and that the greater potential is at these lows. Okay, unless they're cleared, which is possible, right? It can happen. So be open to that. Does that make sense? Okay, good question about oil. I hope that answers your question. All right, let me see what else we got here. Okay, so the yen. All right, how am I doing with time? All right, I got a few more minutes. So you know what? Let me just run through some of these questions real quick. Let me see what I can answer very quickly. Keep going. You will be Kitco News. If I benefit from broadcast, Kitco, and your Seinfeld impressions was. Oh yeah. Jerry would probably complain. That guy sounds nothing like me. Get him off Kitco. Do you see sharp BTC? No. So again, like I said, to answer this question about the dollar and Bitcoin, if dollar pulls back, like I said, it's not one-to-one. I would not. That's not enough of a catalyst to get Bitcoin. You know, maybe you see 1,000-point move in Bitcoin, maybe, but I don't think it's enough to give you a trend change. I don't think we're going to see 30K anytime soon. I mean, we can argue that that's an opinion. Again, Bitcoin can do whatever it wants, but I would not anticipate, if a dollar pulls back, I would not anticipate a steep pullback on the dollar. I'd be looking for a higher low and a continuation of that trend, unless we get a new piece of information. Okay. Swap your tea for your coffee. Oh, you're making fun of the way I talk. That's okay. That's all right. It's okay. I'm making fun of Londoners anyway. It's all right. It's cool. We're even now. Alex, XPEV. Okay, so hold on. Before I get into that, let me take a look over here, because I see I missed a lot of questions over here. Let me see what I can get over here. Okay, that was oil. Hey, Ben, good to see you from Toronto. How are you? Your lessons are, oh, cool. I appreciate that. Ben, I've actually used quite a few of your charts in the charts that you've sent me were very good. Okay, so anyway, thanks for those. Hey, Alex, what do you say about XPEV? Okay, so XPEV, you asked me twice. Let me see what else. Hello from South Africa. Armin. Euros, okay, the Rand, South African Rand. Okay, hold on. Stian, greetings from the province of France. Oh, you're in France now? Okay. Could you have so Swiss against dollar? No, CHZ, that's not Swiss. Okay. Oh man, I got a bunch of these questions here. US dollar currency index and the effects of Bitcoin. Okay, I went over that a few times. Dollar strength right now into coming mostly from yen and euro. Here's the thing about the dollar strength. It beats up not everyone at the same time. Right. It's a pressure that builds up. TradingView doesn't notify me about the streaming. Oh, Kim, yeah, I'm not sure why. Take a peek at MCD for a short. Okay, wow, I got so many questions here. All right, I just want to get through all of them. I want to see what I can answer. But this way, the more exclusive. So don't rush the streaming. We know how much value you have to offer. Oh, I appreciate that, Armin. Well, but the thing is, right, that's great for you guys because you guys don't have to share me with people. But I have to look at the time my time that goes into it and the return on that. I have to look at that. And of course, I enjoy doing these streams and helping people, but it's very time consuming and that becomes costly after a period of time, right? So I have to look at it from a business aspect as well. But I appreciate that comment. But yeah, of course, you guys want to keep it quiet because you get to ask me all kinds of questions and I have the time to answer your questions. All right, that's why no one shares my stuff. Let's move along here. So all right, so XPEV. Let's do XPEV. If I missed your question, I got to wrap this up here in just a few minutes. If I missed your question, I apologize. Okay. Now I said like for the continuation of this month. And by the way, TradingView people, let me see something over here. You guys click. I see a few more clicks. Do me a favor on TradingView. Please press the like button because I guess that can help me on there. Right. I need to have some more social improvement here. So if you can, please, it doesn't cost anything. All right. So like I was saying, I will continue this month streaming every Monday. Okay, but new month comes, I'm going to change that schedule. I'll remind you again, when we get to that. All right, so XPEV. Let's take a look. For a short, you're calling that? All right. So what is it? Oh, XPIN. Is this an EV stock? It might be an EV stock. I'm not sure. But here's the thing. So for a short, here's the weekly stock. Let's first take a look at some levels. Right, so you have a support, old support, new resistance, right? So you have that argument with you there. There's no trend here really, right? You can argue that, that's a range low area and this is a range high area. So you have that, okay? Let's go to the daily chart. So as far as your short idea, you have your level. The thing is, if you're taking this now, you're kind of chasing it. The sell signal was much earlier. The sell signal was this pin bar right here at 31.89. Okay, this would have been much better in terms of reward risk. Of course, we can see that now. If you take this, you're taking the break of support, which, okay, I mean, you can make an argument for that, but understand you're taking more risk. Okay, the risk up here, of course, was much lower. Compared to now, because if this thing reverses in your face, that's the risk that you're facing, right? Which it may not reverse in your face, but are you willing to take that chance? I can't answer that question, only you can. So, yes, I can see the trade idea. I see you have, the pin bar lower high going for the lower low. General market is generally bearish. So you have that with you. I don't know when they have their report, the revenue, whatever, make sure you're aware of that because they're coming out in this time because that can affect things. But if you go for the short, I would say it is aggressive because you are fighting this structure. Keep that in mind, okay? You have a support right there. So this thing, if this thing is going to hold, you're going into an area where it may start to hold. So if you want to take that chance and it gives you a conflicting signal, it's one that you certainly should be quick to make adjustments on, right? Don't sit there and hope with that one. I mean, you should never hope to begin with, but don't sit there and be lazy with this one. You understand? There's not too much of a chance to give it. Certain things you give a chance, but if this thing turns quickly on you, then it's basically saying that this structure, this shorter term structure, is still in play. Okay. Otherwise, if it starts breaking and momentum continues your way, you have this area to measure, right? Or that's some potential there. And then you have this area right here, which is what, $23, 23 and a half, right? So there's some room to play with there. Does that make sense? So those are the levels. Now, how you manage that is going to be up to you. Okay, one more question. Again, I apologize if I missed your question. Come back next Monday, all right, and I will get to your questions. Yeah, EV stock, not short. Oh, but long. Oh, I'm sorry. Okay, so as far as the long, yeah, this area right here, I look for that, right? Because right now you're in a potential double bottom area. I could see the long. I could see that if you get that failure, like that reversal right there. But again, you're playing this structure. Okay, so long potential. Again, because you could look at these things from both sides. I mean, I saw the short because I see this thing breaking, and that's when you see the lower high. This thing is likely to start breaking supports. Okay, but if the market chooses otherwise, the bullish potential would be back at these highs. Okay, but the market, the general market, and the environment doesn't exactly favor that. So keep that in mind, right? Long potential in general is less. Okay, so just as far as expectations go. All right, so good question. All right, one more. I was thinking long because it started to break some resistances, but some small ones. Right, all right, I got you there. Okay, so let me do, all right, so I got Armin here. He's been here for a little while. Euro ZAR, right? Euro against the South African Rand, right? Let's take a look. Euro ZAR, how does this thing look? So let's look with the weekly chart. I mean, with the euro and all the nutty stuff that's going on here, these things can look a little wild. Let's take a look at the bigger picture, all right? Very quickly, weekly chart. Now, I mean, bigger picture, we can argue the bigger picture we can say is range bound, right? Your range low is here, and you're still inside that range. Your range high is here. That goes back quite some time. So bigger picture consolidation. Midterm, you can say is bearish, right? Because you had the failed high here. It tried to make that higher high, failed right away, made the lower low, okay? And then it reversed hard, okay? So that's a little conflicting, but I'll say, since this is a lower high over here, this is generally a lower high relative to this high, I'll say that the midterm trend is, bearish, okay? Short-term trend, which is basically this here, I would have to argue is, again, bullish because we have the higher low in place. And it's going for that higher high, right? So this is very conflicted. So what do you do in something like this? Well, always look for swing trades, look for the broader movements, right? This broader movement is bearish. So you're going to have resistances in here, and you're at one right now. So I certainly wouldn't be looking for longs after this move, although this thing can change, right? If it clears this area, you have this area. So let's go over the levels, all right? That's really the best thing. So you have this area right here. You have this area up in here, right? These aren't exact, but these are your levels going forward. Now, as long as price stays below this level, right, this resistance, bearish trades are still within reason, even though this structure is changing, right? Because there is a higher low. So you're at your first resistance. If a sell signal develops here, I would be open to a short. Or if a sell signal develops somewhere inside this range, I would still be open to a bigger picture short. Keep in mind, this is a weekly chart, okay? And we're talking swing trades. So I would be open to those areas for a short. If the market doesn't give you that short and you start breaking, okay, and this thing starts pushing up into here, right? I would classify this area up in here, which is what? $8.30, like this area, the mid $8 area. I would classify that as an aggressive shorting area, okay? It's a resistance, and it can turn into a range high, double top type of situation. So probability for a short is still with you, right? The reward risk is still with you. But if you try that and it fails, meaning it breaks higher, then you have a new trend possibly unfolding at that point. You can argue that these resistances are cleared, and then I would be looking for supports at that point for longs, okay? Now, what about now? Can you look for longs now? You can. since this is a conflicted situation, but not at these current prices. This is not a good area for longs right now because you're at resistance. Does that make sense? So if you want to look for long, if you're thinking bullish, look for supports, okay? That's your first support right there on the swing trade area. That's what, 16, what is that? 1625? I just said 8 something. What the hell am I looking at? I meant 18. I'm sorry. I said 8 before. I meant 18, mid 18s, not 8. Can't see anymore. All right, so point is, this current price area is not a good place for longs. Look for a pullback. If you're interested on the swing trade long, look for a pullback. But if you take a long and it clears this support, market's bearish. Does that make sense? That means that this movement that you see right here, this higher low, becomes negated. It becomes no longer in play at that point, right? So that's how you listen to the market. That's how you let the market tell you what it wants to do instead of asserting your own ideas. I'm not asserting my own ideas. All I'm saying here is we have levels and we have potential behaviors that can occur at these levels. How the market, where the market chooses to go after that is how it chooses. So you have to choose to listen to it. Does that make sense? Okay, so I'm going to leave it at that. Again, I apologize. I missed a bunch of questions. I apologize very much for that. Let me just see what you guys are saying here. Okay. Adrian, hey, cool. Hey, good to see you, Adrian. How are you? All right. So, Jan, by the way, thanks. Oh, I appreciate that. Bitcoin never saw a recession. Bitcoin does not have a lower bound. Every support can break, right? Okay, I'll answer that because it's not really requires a chart. And then I'm gonna wrap this up. And again, I appreciate everyone's questions. Again, if I missed your question, please come back next Monday and I will answer your question. Hey, TradingView people, do me a favor. Make sure you get more of an attendance next time. I mean, man, come on. All right. This is why I have to skip you guys. I'm joking, but seriously. All right, now, this question here. Bitcoin never saw a recession. Well, Bitcoin, keep in mind, when Bitcoin first came to the scene in 2009, we had all that financial stuff going on, right? Banks going out of business and blah, blah, blah. Remember all that? And Bitcoin was meant, the purpose of Bitcoin was meant to fight inflation and basically take power away from your central bank, no matter what country you're in, right? That was the purpose. That was one of the main purposes of Bitcoin. So that's when Bitcoin came about. And since then, I mean, have we had any serious recessions? Not really. I mean, we've had basically stagnant markets since then. And as Bitcoin matured, I mean, look, let's just look at this in terms of the bond market. Okay, that's the best way to look at it. People always look at the Bitcoin chart when they make that, like, when they're trying to think of that. But what we really should be looking at is the bond market, and you should be looking at the bond market going back all that time, because that's really like the major factor here. The bond market is the controller or the major force in the business cycle. Okay, so let's go back. Let's go back, and we're going back here, right? So Bitcoin came out right around, look at the bond market. Let's just go back. Bitcoin came out around here. Okay, right around here, 2009 came out. Look what the bonds were at that time. Okay, the bonds, I should be looking at a yield chart, but the bonds were basically in a rising, the bond prices were generally rising, right? Higher high, higher low, higher high, higher low. Okay, higher highs, right? Now we're getting into 2013, higher low. This is not bearish. This structure is not bearish in bond prices, which means yields were going lower. Okay, good for Bitcoin. Generally puts good pressure on Bitcoin, not bad pressure, not bearish pressure. Going back in time again, yields started to rise, interest rates started to rise. Wasn't there like a Bitcoin bearish? Well, let's see, what year is this here? 2018. Is this 2018? Do we remember what happened to Bitcoin in 2018? We went from 20K back to 3K. Does anyone remember that? And all the morons were calling Bitcoin going to 100K, and we went to 3K. And remember that? Look at the bond market. Interestingly enough, the bond market rates were generally rising, generally. Okay, again, it takes time for these things to develop. Now we have that situation, March 2020, Fed pump, as Kai likes to say, Fed pumps cocaine into the economy to protect us from blah, blah, blah. And they start mailing checks to everyone because, to help us save blah, 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 and whatever, right? And the government mailing us checks because, that's what we do here. And look at this, bond prices going vertical, which means rates are going into the toilet, right? Great for Bitcoin. Bitcoin went to 69K. All right, so to answer your question, as far as, Bitcoin's never been into a recession. I mean, where was the recession here? We had some rising rates occasionally, but nothing like what has gone on here. Now, also keep in mind, all this bond stuff is really relative to lots of other stuff that's going on at the time. The financial news, when rates were rising over here, okay, or whatever, the financial news may have been like, the market's going to zero. We're in a recessionary. Bond yields have inverted, and that's recessionary. Blah blah blah. They could have been saying that at that time. I don't know. But we're looking back here at the bonds now and looking at where we are. I mean, rates are basically where we were before the stimulus, right? We've actually tested lower bond prices, which means higher rates than we were at that time before rates went into the toilet, right? So, to just kind of give you some perspective, as long as bond prices keep going lower and pushing rates higher, that's only going to put bearish pressure on Bitcoin, no matter what anyone says, no matter how optimistic. I've read some nonsense, optimistic garbage about Bitcoin's going to 100K. You'll see the Fed is going to turn around. The Fed is going to. How do you know what the Fed is going to do? We don't know. They might, but they've given us no hints about that. Okay, they haven't even said that they were going to stop raising rates. They haven't said anything. So understand that. Until that changes, my point of all this is, he's saying here, Bitcoin does not have a lower bound. Every support can break. As long as we have bearish pressure and bearish catalysts, that's the environment that favors Bitcoin. Not only is it a protector of inflation, right? Like a store of value, like gold, which again, the Fed is fighting furiously, as you can see with the dollar, partly because of the dollar. And you see the bond, what's going on generally in the bond market. Bitcoin doesn't have the environment for speculative assets. Bitcoin needs a speculative environment. Bitcoin needs lowering rates. Bitcoin needs easy money. Altcoins need easy money. How do you think NFTs came about? Easy money. Too much money floating around. Money's coming out. Okay. Strong dollar, not good for anything. So as long as dollar stays strong, I'm not talking, a little pullback in the dollar doesn't mean anything. Okay. Even a dollar pulls back to 104, a dollar pulls back to $1, in the basket of currencies, doesn't mean anything. The trend needs to change, and a trend change in the dollar can take quite some time. All right. So understand those important economic facts. These are not opinions. These are, hey, this is what the government's doing. This is what interest rates are. And these factors are not favorable right now. At some point, will the cycle change? Of course, it's a cycle, right? It's called the business cycle. And at some point, there will be changes. Often, when there's a change in power in the government, which, we have elections coming soon, midterm elections, when there's a change in the balance of power, monetary policy can change. So there's an opportunity for some changes to occur. Now, will they change what the Fed is doing? My opinion, I believe it would be unwise. But hey, I don't know how things work over there. I don't know what kind of pressure Chairman Powell is under politically. Okay, I'm sure he's under some kind of political pressure because he's making a lot of people look bad right now. But that has to. I'm not going to sit there and forecast what they're going to do or how they're going to change things. The market needs to adjust. New information needs to come into the market, and then we can have a better picture. Does that all make sense? What I'm talking about here is macroeconomic context. A lot of beginners don't even bother with this stuff. When I first started out, I had paid no attention to this. Okay, it's become more in focus in this bearish market situation because for two reasons. One, as long as it continues this way, we can't expect any kind of positive changes anytime soon in the markets. And that's very important for investing. And for two, I want to spot the changes so that I'll know when to aggressively invest, or at least put more money to work on the longer term. Right now is still not a good time. And you have these fools coming out, oh yeah, now's the time to invest. It's certainly lower prices, which is better than higher prices, but I still think it's too early because of these environmental factors. I'm waiting for some changes in the environmental factors. There's no changes. Okay, the changes will come at some point, and at that point, I'll reevaluate. Does that make sense? But I'm not going into this with any opinions. I look at what I see, and I adjust to that information. People ask, well, where do you think this? I have no idea. I don't have any opinions. I listen. That's all I do. I listen. All right, so I'm going to leave you guys with that. I know I talked a lot more than I wanted to talk here. I really think it's something to do with TradingView's change in notification. Oh, I don't know why, but it has changed and will affect how many people know that you're streaming. Maybe TradingView doesn't like me. Maybe they're like, this guy is telling too much honest stuff, and he's telling people how to protect themselves and how to protect their capital. We don't want that. We want them to lose their money. TradingView would say something like that. I'm just joking. I'm joking, TradingView moderators. No, but you understand what I'm saying. Okay, so let's see what else here. I'm just looking, I'm reading. Hey, Avi, good to see you. Okay, all right, people, so cool. I'm going to leave you with that. Again, come back next Monday. I will answer your questions. If I missed your questions, I apologize. Other than that, I want to thank you all for spending some time with me here today. I hope you got something valuable out of this. I want you to be objective. I want you to be confident, okay? Please leave your ego and please leave your opinions at the door. They're not going to help you. Please stop listening to fools that feed you the seeds of hope. It's not going to help you. Learn to be objective. Learn to get your information from the market. There is some valuable information in the chart. Charts are not perfect, but they can provide some information that can help you improve your objectivity. But from there comes a point where risk tolerance is not something you're going to get from a chart. You have to decide how much risk you want to tolerate or not. And that's a very important factor in this whole thing, okay, which a lot of people don't understand. So I'm going to leave you guys with that. Dean, hey, Dean, good to see you. Hey, thanks. Dean's a new follower of mine. Dean, thanks for stopping by. Hope you like what you're learning so far. Risk off environment. One good week means nothing. Yeah, Dean, I'm with you on that for sure. I agree with that. Nothing has changed yet. It takes time. Anyway, so people, I'm going to leave you with that again. And thank you all for spending some time with me today. Like I said, enjoy the rest of your day or the rest of your evening, wherever you are in the world. And thank you very much for watching. And again, next Monday, okay? Join me. I'll answer your questions. All right, turning this thing off now.